Hello everyone, welcome to my YouTube channel. In this particular video, we'll solve one more problem related to the incidence of tax. The question is on the screen. Income from agriculture in Africa received in India. So the income has arisen in Africa, but you're receiving the income in India. When either of the one aspect is in India, we consider it as Indian income. As it is an Indian income, all the three people will be taxed. Next. Dividend received in UK from American company. So arising aspect and receiving aspect is both outside India. When both are outside India, we consider it as foreign income, and it is a foreign income from other sources. So only one person will be taxed, that is ordinary resident. So only ordinary resident will be taxed. Next. Interest received on post office savings bank account. So as you are aware that in my part 1 video I have told that post office saving banks, whatever the interest you get on that savings amount, if you are a single account holder, then you get the exemption up to 3,500 rupees. So here you are receiving interest of 8,500, out of which 3,500 you will get the exemption. Remaining 5,000 rupees will be taxable. It is Indian income. So remaining 5,000 is an Indian income. All the three people will be taxed. So 8,500 is the actual interest received. In that you will get the exemption. 3,500 is the exemption whatever you get. The remaining 5,000 rupees will be taxable. Pension from Belgium for service received rendered in India with limited company. So services are rendered in India. So income has arisen in India, but the pension you have got it from Belgium. So the receiving aspect is outside India. Either of the one aspect, if it is in India, so you will consider it as Indian income, and all the three people will be taxed as it is an Indian income. Next. Gift from friends. So as I've told you in the part 1 video, if your friend is giving gift till 50,000, you will have the exemption. If the amount is above 50,000, then the complete amount will be taxed. So your 80,000 is more than 50,000, so complete 80,000 will be taxed. So 80,000 is an Indian income, so all the three people will be taxed. 80,000, 80,000 and 80,000. Next. Income from business in Chennai, business managed from Sri Lanka. So income from business in Chennai. So income is arising in Chennai. So if arising aspect is in India, then we will consider it as Indian income. All the three people will be taxed. So 25,000, 25,000 and 25,000. Next. Income from business in Kuwait, business being controlled from Mumbai. So you are controlling that particular business from India. So it is a controlled income. Next, further read the question. 25,000 received in India. So there are two types of income. One is controlled income and one is Indian income. So from 65,000, 25,000 is the Indian income. Remaining amount will be controlled income. So Indian income they have given directly, it is 25,000. So as it is an Indian income, all the three people will be taxed. Remaining amount means total amount was 65,000. The remaining amount is 25,000. So if you subtract both, you will get 40,000. 40,000 is a controlled income. So controlled income, two people will be taxed. One is ordinary resident and second one is not an ordinary resident. Next. Income from agriculture in Punjab received in Mumbai. So both are in India. So arising aspect and receiving aspect is both in India. When it is both in India, so all the three people will be taxable because we will consider it as Indian income. But carefully analyze the question. Income from agriculture. Income from agriculture. So agriculture, whatever the income you get from agriculture, it is completely exempted. Agriculture ಇಂದ ಬರುವಂತಹ income ಅನ್ನ ಇಂಡಿಯಾದಲ್ಲಿ completely exempt ಮಾಡಿದ್ದಾರೆ. So whatever the income you earn from in India from agriculture, it is completely exempted. So it is exempted. Clear? Next, income from agriculture in Bangladesh, which is outside India. Later on, it was remitted to India. So the word remitted should be ignored. So just concentrate on this part. Income from agriculture in Bangladesh. So income is arising outside India and receiving aspect is also outside India. When both the aspects are outside India, we consider it as foreign income. It is a foreign income from other sources. So when it is a foreign income from other sources, only the ordinary resident will be taxed. Only we'll be taxing on ordinary resident. Next, profit on sale of building in India. So arising aspect is also in India and receiving aspect is also in India. When both the aspects are in India, we consider it as Indian income and all the three people will be taxed. So all the three residential statuses will be taxed. Next, profits from business in Indonesia. The business is controlled from Delhi. So it is a controlled income. You are controlling a foreign business from India. So it is a controlled income. In controlled income, only two people will be taxed. That is ordinary resident and not an ordinary resident. Because it is a controlled income. Next. Okay. Income from Indian partnership firm. So as I have told you that any income received from Hindu undivided family and Indian partnership firm, it is completely exempted. So it is an exempted income. Partnership firm, if you receive any amount, it is completely exempted. Next, interest on savings bank deposited in State Bank of India. So both arising aspect and receiving aspect is in India. When both the aspects are in India, it is Indian income and Indian income, all the three residential statuses will be taxed. Next, interest on German development bonds. So it is a foreign income, but one third of it is received in India. So one third will be Indian income. The remaining part, the two third, will be foreign income. So let me show you how to do this. Interest on German development bonds. Okay. So interest on German development bonds, one third was received in India. So Indian income, total amount was 51,000 into one third. So one third of the amount was received in India. So as it is an Indian income, all the three residential statuses will be taxed. The remaining portion, that is two third, it is foreign income and it is a foreign income from other sources. So only the ordinary resident will be taxed, 34,000. One more transaction we left out. Dividend from foreign company received in England. So both are outside India. Arising aspect is also outside India and receiving aspect is also outside India. When both the aspects are outside India, we consider it as foreign income and it is a foreign income from other sources. So only ordinary resident will be taxed. When you add all the columns, you will get the total income. So the total income for ordinary resident will be 5,75,000. For not an ordinary resident, it is 5,13,000. And for non-resident, it is 4,33,000. This is how you need to solve the problem. Hope you have understood how to solve the problem. In my next video, I'll come back with one more problem related to incidence of tax. Thank you for watching the video. I'll come back with the next video.